Welcome to the Daily Update, where I'll go over the action in the market for Tuesday, March 19th, and then we'll see how things look for Wednesday, March 20th. The S&P is showing some resilience right now. There's still some weakness developing under the surface that we want to pay attention to. There's also some short-term overhead resistance based on pivot levels that we've been having a hard time getting at, and I'll show you that. But the big message in Wednesday's session is going to be what is said at the press conference. It's pretty much concluded that the Fed will not change interest rates. They'll come out with a statement. There's some information that they'll release, a dot plot type of thing, and the markets will quickly dissect that and try to figure out how many interest rates are they going to be. Last time it looked like they were going to be 3, and we'll see if there's a change to that somewhere along the way. But in the face of that, the day before the actual meeting, we ended up opening lower, but then really bounced back and closed at the high for the day. So that, in a positive environment, just kind of concludes that things are positive. But at the same time, there's always things that we need to worry about and be aware of, even in the most positive of situations. First of all, just want to wish everybody a happy spring. I know it's a little bit different this year because of leap year, but if you're like me, I really enjoy the spring and summer months. And so this is the beginning of life. All right. Also note that I did post a video a couple of days ago about the program that I'm hoping to launch around June or so. It's on the channel, both on YouTube and on Rumble. Please feel free to go check that out if that's something that interests you. All right, let's go back and talk about what happened. We had a gap lower open. The futures were quite negative. We were down below S1 at 51.38. Prices then set the low right after the open, and we climbed back above the unchanged level, that crazy 51.50 area. And then we continued climbing above the daily pivot at 51.57. We got above R1 at 51.68, and we hit resistance at a round number at 51.75. We chopped between 51.75 and R1 before we saw some buying later in the day to close prices at the daily high. We were up 0.56%. Again, we're not seeing huge percentage moves, either up or down right now. What we're seeing is more internal. What's going on? The shift that's taking place. We were below average with volume, which is not a real surprise ahead of the Fed meeting. Some of these folks that manage millions, if not billions of dollars, they probably don't want to take huge positions ahead of what could really change the climate of the market. We are positive with our technicals. We have some overbought indications, specifically in the intermediate term. We do have some overhead resistance just to be aware of, even though we did set an all-time high. There are some areas that are showing some weakness as well that I'm going to go through. And yes, it's about inflation and interest rates, but it's going to be, what is Jerome Powell going to say? How is the market going to interpret what he says? What is the Fed looking at as far as where interest rates are going to go? Of course, we have all the different geopolitical events, but it's pretty much about the Fed in Wednesday's session. Some comments. We did close at another all-time high for the S&P. And NVIDIA, it started off really down, and then it just clawed its way back and ended up moving higher. And that pretty much brought along the rest of the market with it. And the Bank of Japan, it's now exiting its negative interest rate policy. It's also officially ending its yield curve control policy, and it's not buying any more ETFs or REITs. These are real estate investment trusts. And that's just meaning that they're backing off a little bit. And that might have been what puts the S&P futures under some pressure, just because when you see a change like that, the more certainty or the comfortable nature that was there is now being taken off, and that might have caused a little bit of concern, even though it drifts things back over to more of a free market type of approach. On a short-term basis, we do have a new addition, the Williams percent R. This is one of our shorter-term touchy indicators. The stochastics have been on this list for a while. In the intermediate term, we have a new addition, the rate of change going back 50 periods. It's not really extreme, but it's starting to get above that level. We're still keeping an eye on our oscillators. They're giving us very high readings, but they're dropping below their moving averages. Even with the up day, The bullish percent index also declined and is just barely above 70 right now. The Sean trend meter did go back up, and then our longer term 10-period new high, new low study for the S&P. Longer term, we have the 150 and 200 simple moving averages that still remain extreme. We're wondering if there's going to be a change to this current scenario, that the Fed is done raising rates and that possibly in 2024, maybe May, maybe later than that, that they will look at cutting rates. We'll see if there's any adjustment to that. The dollar was up, and this, I think, had to do mostly with the Japanese yen really falling. Now, the Japanese yen's been in a downtrend compared to the dollar, but with all these changes going on and these safety measures kind of removed in the Japanese market, that pushed the currency in Japan down, which helped the dollar go up. Interest rates also declined. We're still kind of at a higher level than what we've been at recently, but we did close at 4.3% with the 10-year yield. We still have the yield curves that we follow that remain inverted. And we actually ticked down a notch based on sentiment. We had been at 71. We came in at 70. It's still positive. And this might have been some additional hedging that's taking place ahead of the Fed meeting. Our trend is still positive, but we're still dropping below the moving average. It's still suggesting that the trend is weakening. But we are still in a trending environment because the ADX itself is still above 20. With the up day, we're positive, and the momentum, I'm right now keeping it mixed to positive. Now, what's going to happen on Wednesday? Who knows? And so we kind of just have to let the market gyrate and do whatever it's going to do. Are we going to be able to break to the upside? Is Jerome Powell going to say something that freaks the markets out and really send things down? This is more the short-term things that we go through. But we typically, once all the gyration gets done, we have a tendency to switch back to what the trend was before. Now, there's always exceptions to that, but we saw that even during COVID. We were in a solid uptrend. We just tanked, and that's what gave us that V bounce that led things all through 2021 to going a lot higher. We saw that through Brexit few years back. We saw that in the 2016 election. The markets will gyrate and go in the opposite direction, and then at some point resume typically what the trend was before. And right now it continues to be positive, but we're also coming into a time of weak seasonality. Doesn't mean we're going to go straight up. There might be some times where the market is under some pressure. The reports that came out, we just had the housing starts. They were up 10.7% on a month-over-month basis. When you adjust that to an annual rate, it's 1.521 million, more than the 1.435 million they had expected. Last time we had 1.374 million. So we're seeing some growth here. And this is a leading indicator because you have to start building a house before people can live in it. So this is suggesting economically that things are improving. Building permits, also a leading indicator because you have to get the permission to be able to build something before you can. This came in up 1.9% month over month. When you look at that annually, it's at 1.518 million, more than the 1.48 million they had expected, and up from the 1.489 million we saw last time. Here's a chart, and this just shows a 3-month average to kind of smooth it out a little bit because they can gyrate around. The blue line are housing starts, and they're going up, and the building permits, that's the yellow line, they're continuing to go up. So this is showing some positive growth looking out. Here's the seasonally adjusted rate, showing how it did increase over the previous report that we received. And then I have some Isabel Net blog charts. This is another technical analysis chart. This is a weekly chart with different moving averages. And I like to show this because they look a little different than the charts that I show. They like this, you know, here we have this cup and handle type thing. I'm not a big pattern person because I've seen them fail as much as I've seen them succeed. But this is looking rather positive, and it has some projections on here that, at least for right now, we might see some weakness. It might last for a period of time. But when you take a bigger picture look at the market, we're still looking positive. And then this is mega cap growth and tech positioning. We're above this purple line here, just showing that this is the place to be right now. Get in the Magnificent Seven, get into tech. And this is just showing the number of folks that are in there. Yeah, we're getting kind of an extreme reading, but we have been higher than this before. And then this is the dollar and then they take the forward PE ratio for the S&P and shift it forward 12 months. To give you an idea, the dollar and forward-looking PE, they tend to move in the same general direction. We're seeing a little bit of a disconnect here, where the PE ratio is going up and the dollar, it's been bouncing up lately, but they're getting kind of far apart. Now, there's other times when that's happened as well. We look mainly at the overall trend, but if these are both tending to go in the same direction, that gives us more insight and justification that earnings looking out into the future going up is not necessarily a concern, at least for right now. Then we now expect 3 rate cuts. This is what we had before. When you go earlier on in 2024, they thought there were going to be 4 rate cuts. I even heard as many as 7 from some people. Yeah, okay, just roll the dice and come up with a number. But this is what they're kind of thinking right now, where we're going to have the first rate cut in June. So they're taking May off the table, according to Goldman Sachs, and then they're going to see another rate cut coming up, and then the terminal rate down here into 2026. Now, we'll see how this is adjusted, and because this is going to change after today's meeting, and as economic reports are released, this will also adjust as well. This is just the way things look right now to Goldman Sachs. And then looking at market implied long-term growth, we're looking at 11%. Okay, yeah, we're above the long-term average, but way back in 2000, we were at 16%. Even after the COVID plunge and then the bounce up, we were at 13%. And there was even a bounce here when you had tax reform back in 2019, I believe that was. Or maybe it was before that and it took a while to kick in. But yeah, this is going up, and at some point this might be a concern, but it's not necessarily a concern for right now. And then this is just projecting out. This is the core CPI based on the month-over-month reading, and then what the corresponding annual rate would be as the Fed is trying to get down to this 2% level. Didn't really see anything on Twitter that I found really insightful. Here's our intraday chart where we did gap lower. We came down below S1. We were able to build a base right here. And then after the open kind of got taken care of, we started to go up and we went above the unchanged level. We got above the daily pivot. We got all the way up to R1. And then we danced along this for quite a while. And then we saw some buying going into the close. This could have been some short covering that was happening because you got people that shorted the market and now they're starting to lose and they have to buy to get out, and that can produce some buying. And then here's our intraday chart where in the initial overnight session, we did see some weakness as things were developing in Asia, specifically in Japan. We bounced up a little bit when Europe opened, but then we saw some weakness, and then that led to the weaker open, but then we saw the bounce back, and we're just drifting a little bit in the initial overnight session. And we're seeing growth in value on an intraday basis pretty much even with each other. We're not seeing the blue line above the red line, but they both were positive. So that's showing a little bit of an improvement there. And we did gap lower when we had the lower open with the S&P with growth to value looking at the S&P, but then we spent the rest of the day coming back. So we're kind of range bound right now on an intraday basis. Here's our end of day chart where growth was up just a little bit more than value for the large caps. It was up a little bit more with the mid caps as well as the small caps. And then as I like to remind you, this core middle area, these are the ETFs. And then on the left and on the right, that's when we break it down to value and growth. We are seeing a little bit of a weakness here when we look at small cap growth to small cap value. We spiked up. We've been chopping sideways. Now we're coming into the lower end of this range. We saw a little bit of a tick up here when we look at mega cap growth to value. So this is showing a little bit of an improvement. And we ticked down just a little bit. We are still positive with S&P growth to value, but we came down just a little bit in the Tuesday session. And then looking at the discretionary to staples ratio, it ticked up just a little bit. It's still in a longer term uptrend, but we want to see this perform better to have more confidence of the upward move. Here's a newer chart that I haven't shown. This is just an ETF of large cap growth with some moving averages here. I have a 50 period, a 100 period, and a 200 period here. And yeah, we're just pretty solidly in an uptrend. We compare large cap growth, mid cap, small cap. I just wanted to have a chart of large cap growth all by itself, because this is the real leadership area of the market. Looking at our trend, we're still below the moving average with the ADX, but we're still above 20. So this is a weakening trend, but we are trending. The green line is coming down, but it's still on top, so we default to positive. And you can see kind of the trailing off here. Even though we set an all-time high on a closing basis, we've really been chopping sideways with the S&P. We're also below the moving average with the short term. The green line is also coming down. We're in a trending environment. It's a positive trend, but it's a weakening trend. We did drop off with volume to below average. And then this wasn't updated like it should have been here. So keep waiting for that. We'll see if we get an update there. Looking at the VIX, we were down with the line chart as well as the bar chart, but we're still maintaining this series of higher lows as fear's been creeping back into the market with the VIX. With the up close that we saw, we declined with the VIX of the VIX, both with the bar chart and the line chart. We're really not trending right now as far as the MACD is concerned. We're not going up. We're not really going down, as it's right on top of its moving average. We did see a spike up on the one-day chart of the equity put call ratio. This could be some hedging ahead of the meeting, but we still continue to decline with our 5-period simple moving average of the equity put call ratio, and that is positive. Here's the volatility risk premium. We're still pretty much in this range. It declined a little bit with the up close that we saw, so we're not really getting any kind of insight from this. Our advanced decline line studies with the update, we were up based on price and volume. We're coming back to this previous high with price. We haven't quite come back up yet based on volume. We're pegged at the top with our 5-period moving average. We're still declining with our 10-period, although we're trying to flatten out here, as the new highs have been dropping off lately, but they're really exceeding the new lows. And we're continuing to look okay with the advanced decline ratio. We're above 0. And we turn back up slightly with the accumulation distribution. So that's turning somewhat positive. We saw a bit of a bounce, but we're still under the moving average. Sorry about that. I never have to clear my throat when I start these videos. It's just as I blah, 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 then that's when it seems to happen. But looking at the Chaikin money flow, we're below this moving average, even though it did bounce up. We want to see this go above the moving average and then see the red line turn up. The Chaikin oscillator did come down and drop just a little bit below the midpoint, but is now turning back up. And I wanted to show this because we're seeing a little bit of a negative divergence here. This is the S&P on top. This is the cumulative S&P based on price, where we set a new high here, but we're lagging a little bit when we look at the cumulative volume. And that may just be some apprehension ahead of the FOMC meeting. Looking at our advanced decline studies here, the NYSE common stock showed some improvement. We are showing some improvement with the S&P. We turned back up with the mid caps, and we're coming off of the moving average with the small caps. So we saw some more broad market improvement here. Looking at the short term, and I'm going to point this out in a number of different charts. See this pivot point here? Even though we closed at an all-time high, we see some overhead resistance right here at this pivot point, and we've not set necessarily a new intraday high. So if things are going to turn more positive, we want to be able to break above this range that we've been in. Now, if we see some weakness, of course, we'll fall below that. But for right now, I'm counting this as overhead resistance. On the bottom, we drop to below average with volume. We are looking extreme with the Williams percent R. We're still above the 20-period moving average study. And again, we're going to be watching this if we see some weakness to see if this support level holds, especially on a closing basis. We went back up with the 20, 50, and 200-period moving average study, and we're just barely starting to get extreme with the 200. We went back positive with the Force Index. We crossed back above 0. And we're extreme in the short term. We're turning back up in the intermediate short term, and we're still extreme and turning back up in the long short term with the stochastics. We're not necessarily extreme now with our standard deviations chart. We're in the +2 standard deviations channel. It's when we get up into the +3 or the -3. That's when we look to have gone pretty far, pretty fast. The balance of power is turning back up after coming down to the midpoint. That's turning more positive. We switch back over to dark blue with the go, no-go system. That's turning back more positive. We're still looking good with our highest high value and coming up to the blue line. We're still a little bit more negative here with the TTM squeeze. We have the darker shade of blue. The ease of movement is still above zero, even though it was pretty much flat. And we haven't seen any change now with the Arun indicator. It's still positive. We did cross back above zero with the McClellan oscillator for the S&P. So that is turning things back more positive. So we're just barely starting to turn back up with the summation index based on price. We're flattening out still with the summation index based on volume. We also crossed back above zero with the NYSE McClellan oscillator. So it's really hard to see. It looks like we're declining, but with the close for the McClellan oscillator above zero, that will turn the summation index back up. And we're also starting to turn back up based on volume. We're turning back up with the Swenlin trading oscillator. We came down about to the zero line here based on price. We're still negative, but turning back up based on volume. We're still extreme with the oscillator, and we're dropping below the moving average. We're dropping below the moving average based on price and volume now. So internally, the PMO is looking a little more negative. We did bounce back up with the PMOs that are rising. We're flat with the buy signals, and we're starting to go back up in extreme positive with the PMOs that are above zero. We switched from being neutral to positive with the Elder's Impulse system for the S&P. We're still positive with the parabolic SAR. We're declining now with the slope oscillator and starting to drop out of this extreme positive reading. And we're also declining with the MACD. Now, the MACD and all oscillators, they're based on moving averages. So when we're chopping around, not really going anywhere, these indicators can't help but start to turn more negative. And that's what we're seeing across the board. We're still above all of these moving averages that we'll be looking at for support if we start to see weakness. We're coming down and just barely above 70 with the bullish percent index. That's slightly negative because we are still declining. It picked up that lower open and didn't really participate in the higher close. And we are pretty much flat, but still positive with the NYSE bullish percent index. This is more negative. Even with the up day, the NASDAQ 100, it come back above 50, which was turning it more positive. Even with the update, we now dropped down below 50 again. So this is turning more negative. The money flow is above 50 and advancing. That's positive. We're turning back up with the ultimate oscillator. We're right about at the midpoint with the vortex. Even though the green line is still on top, we are seeing some longer term weakness here. We're positive with the RSI 14 and 9. And we bounced off of the moving average with on balance volume. We did turn back up with the stocks in the S&P. Now, this is internally, those stocks that are above their 20-period moving averages, so that's showing some improvement. With the 50-period, we also saw some improvement there. We're still looking pretty solid with the 100-period moving average steady, and we're looking pretty solid still with the 200-period moving average steady. The Coppet curve, though, still continues to be negative. We did go up with the Sean trend meter and are not quite extreme. Here's the rate of change, just barely going above this 10 level. Now, there's nothing magical about this. I put this on here at 10 just to give us an idea. When we go above the red line, that's when we're starting to get extreme positive. And then this looks back over 50 periods. And then looking at our open, high, low, close study, we're still above all of the lines in the mini rainbow. It did act a bit as support when we bounced off the moving average of the high. And we'll be seeing if there is some weakness okay. All right, here we go. If we see some weakness, will one of these lines end up providing some kind of support? Looking at the trend though, the hike in ash, you can see a lot of sideways action here, but we are turning back more positive. We're still positive with the Kagi chart, the Renko chart is positive, and the 3-line break is positive. Don't you love these take one videos? I used to edit them, but it took me 2 or 3 hours a day to do it. And it's like, okay, I'd rather spend that time doing other things. We're coming right back up to this blue trend line again here. We closed just about on it. It would be more positive if we went up from here and could actually recapture this red trend line. But the fact that we're moving up is positive. But if you look at all these price levels, we're kind of treading water. But we're treading water at all-time highs. And then I don't know what to do with this. It seems like every time I bring up this chart, it changes. So now it looks like it might be the 21st when we see the new start of the 50-day cycle. I suppose I should just break out a calendar and count this myself, but I try to rely on the line here and it keeps changing the date. And then here's our longer term chart with the weekly version of the S&P 500. We're still above this longer term resistance. And we've been above this now for quite a while. So I don't know if we're necessarily at the point where we could call this support if we see some weakness, but other times we just hit this and bounced in the opposite direction. Well, more like a ping pong ball or a pool ball bouncing around. We're actually hanging out at this level and have been hanging out now for a while. With our 150 and 200 period moving average study, we're still looking extreme, which also shows good momentum. And then we are just negative now in the short term with the Russell, where all of the other indexes and time frames are positive. We saw some red, we saw some blue. It was more of a colorful day when you look at all of our indicators here, where we did see the bullish percent index across below 70, but then it closed back above 70, and that one didn't seem to get registered here. And then the broader market is still hanging in there fairly well with the equal weight index. We came down just a little bit, but we were virtually unchanged when we compare the S&P, a weighted index, to the equal weight S&P. The Dow chopping sideways as well, but still above this pivot level. We switch back over to positive when we look at the diamonds for the Elders Impulse system. We're also dealing with support and resistance here with the NASDAQ. We have this R1 level above where we're at, and there's still a bit of, we're like 300 points away from that, maybe 250. And if we see some weakness, we'll be following this pivot point here. And if we did bounce up off of this pivot point for the NASDAQ 100. So this is providing support. If we see some weakness, will this hold? If we really start to go up, will we be able to break through this R1 level? And we switch from being neutral back over to positive with the QQQs. But when you look at the momentum for the NASDAQ 100, it still continues to be negative. And we're just a little bit above the 20-period moving average for the QQQ, but we were able to recapture that. Small caps, they were up, but we're just kind of treading sideways. We did recapture the 50-period moving average, and we're right about on this pivot point with the S&P index. We continue to be negative with the Elders Impulse system for the small caps, and we're still above the 50-period moving average with the Russell small caps. We're turning back up, but still below 50 with the RSI. The momentum is negative. The longer-term trend is still positive. The mid caps did see a pretty nice move, up 0.75%, but still below this R1 pivot level. And we still remain neutral. Actually, we switched to neutral from being negative with the Elders Impulse system for the mid caps. And this is Google. It ended up being down, but still from Monday's session, the fact that we really gapped higher above the 50-period moving average, even though we're pulling back now, could come back in and try to fill up this gap. We'll have to see if that ends up happening. But this is helping the moving averages a little bit and where we are in relation to the moving averages. Apple still producing a recent death cross, even though it has been going back up. Tesla in a longer-term downtrend, even though it was down 1.5% in Tuesday's session. Here's NVIDIA. And it started off really weak and closed pretty strong, but see, we're just chopping along sideways. Now that this has become the rage, and people that have never heard of it, they don't even know how to spell NVIDIA. My goodness. And, they're starting to know about this and get involved. And now it's becoming part of the short-term news cycle. We're really not breaking out here, even though it did really help produce a bounce in Tuesday's session. We're not really setting any new highs, at least yet. FANG index also continuing to chop sideways, even though it was up. Financial sector continues to be going up almost 0.5%. We did see a bounce in the dollar. Probably a lot of that had to do with its relation to the Japanese yen. And we could be getting ready to see a golden cross here. Now, this could produce some pressure on stocks. When the dollar's going up, the stock market likes a weaker dollar. So this could cause some issues if it continues to go up. And we're still seeing the transports, the S&P 500, continue to go down. Looking at the world index and comparing it with the S&P, we are seeing where the shorter term correlation is getting a little bit stronger, as well as the longer term correlation. We did come down with the 10-year yield. We were up with the 10-year based on price. And then looking at growth to value, not really big changes here. The Qs are still underperforming the S&P. We turned up with discretionary to the S&P, but we still are below a declining moving average. We're coming right back up to the moving average when we compare large cap growth to large cap value. So at the large caps, we're on the moving average, a little bit of a bounce at the mid caps, but under the moving average, and seeing some weakness when we look at the small caps. We're still positive here with our 5-day moving average of the highs minus the lows, even though it has been declining. As long as we stay above zero, this looks more positive, and we're still extreme positive. This is showing good momentum when we look at the 10-day average of the S&P 500 highs minus the lows. If we see some weakness and then this start to drop, that's going to be more of a warning sign. But for right now, we're camped out up here, just showing that we're hanging on to these gains that we've been seeing. So what's our outlook? The technicals were positive. There is some weakness that is developing as we chop sideways. We're seeing some weakness in our oscillators. We're seeing still some negative divergences. We just want to be aware of those. A solid up move on an increase in volume could take care of that. But until that actually happens, this could also develop into some weakness. And we're still above that longer term overhead resistance. And there's at some point, possibly, some weak seasonality that could develop. We're going to get the MBA Mortgage Applications Index, not a huge deal. The big one is going to be the FOMC announcement at 2 p.m. Eastern, and then the press conference that follows that. We want to keep an eye on all the different crazy things going on in the world. Then in Thursday's session, we're going to get weekly jobless claims, which the market has really been focused on lately, and we're going to get the leading economic index or indicator. This tries to look out into the future. And also know that on Friday, we're not going to have any economic reports. So here is the block for Wednesday's session. Some things that I usually don't cover, like crude inventories and then all the FOMC stuff that comes out. Seasonally, we're neutral to positive with the Dow. We're neutral to negative with the S&P, where we're positive with the NASDAQ. So we're kind of seeing a real mixed picture there. We are in the week after options expiration, which tends to be down more than up. Then we will be on the 14th trading day of the month, where we don't really see any positive seasonality during an election year for the S&P. But at some point, you wonder if this historical weakness is going to come in and actually take over. Also, we're seeing that potential weakness here on this chart. Wednesday tends to be the most negative day of the week, at least according to what happened in 2023. Also, we're back into this negative period now, according to Tom Bowley's research, where we do see some typical weak seasonality. So the warning signs. Now, we were up in Tuesday's session, but volume was below average. When we've been going down, that's when we're seeing an increase in volume. We just want to be aware of that. We want to watch that to see if that still continues. The daily pivot overhead intraday resistance for the S&P, that's the pivot point that I was pointing out. We're close to that. We want to be able to get above that and then close above that for things to turn more positive. Until we do that, that's pretty significant short-term overhead resistance. Copy curve is negative. The bullish percent index for the NASDAQ 100 is now crossed back below 50. And then we have our list of negative divergences that we've been keeping an eye on. And we could potentially be in some kind of a weak seasonal time, at least historically. Positive sign, we're still going down with our equity put call ratio based on 5 periods. The parabolic SAR is positive. The vortex, it's positive, but it's really drifting lower. Small and mid cap growth continues to be positive, even though it's kind of getting near the lower end of that breakout range. Large cap growth continues to be holding up, and the financial sector is positive. So our conclusion, we're positive. We're still developing some signs of weakness for right now, and we want to respect that. And we're still above that longer-term overhead resistance. And we also want to understand that quite often, about the middle to latter part of March, we do see some weak seasonality. In the short term, the extra one is that we have overhead resistance, and that's at a daily pivot level that we want to keep an eye on there. Intermediate term, we're still slightly overbought with some indicators, but at the same time, that could still suggest good, solid momentum. We're positive in the long term, but we're still looking rather extreme with our 150 and 200 period moving averages. Thank you. I hope you have a very good day, and I will talk to you in the next video.